All right, let's talk about a financial world that, most of us have heard of, but maybe don't really get. We're talking about Forex. If you've ever found yourself wondering what the heck it's all about, well, you're about to find out. We're going to break it down. Simple as that. So let me just start by asking you a question. When you think of the biggest financial markets on the planet, what comes to mind? I bet you're picturing the New York Stock Exchange, right? Or maybe the NASDAQ. But the truth is, they aren't even close to being number one.
Yep, that's right. The stock market is obviously massive, but it's absolutely dwarfed by something else. The title for the undisputed heavyweight champion of financial markets, that belongs to Forex.
Okay, so what is Forex really? Let's dive right in and break down the basics of this global currency marketplace.
So Forex is just short for foreign exchange. And put really simply, it's like a giant worldwide marketplace where all the world's currencies are traded back and forth. In fact, if you've ever traveled to another country and exchanged your money, guess what? You've already been a part of it.
And when I say it's big, the scale is just mind-boggling. Look at that number. That's $6 trillion. That's how much is traded on the Forex market every single day. That incredible volume is exactly what makes it the largest and most liquid financial market on the entire planet.
And one of the coolest things about it is that there's no central building, no physical floor. Unlike a stock exchange, the Forex market is a totally decentralized network of computers. And what this means is that it can run 24 hours a day, 5 days a week, basically following the sun, as trading opens in Tokyo, then moves to London, and then on to New York.
So we get what the market is, but how does the trading part actually work? Well, it all comes down to one core idea: currency pairs.
See, in Forex, you never just buy a single currency. You're always trading them in pairs. The first one you see is called the base currency. That's the one you're really betting on. The second one is the quote currency, and that's basically what you're using to measure the value of the base.
At its heart, every single trade is a prediction. Let's say you buy a pair like the US dollar versus the euro. What you're really doing is speculating that the base currency, the dollar, is going to get stronger. If you're right, hey, you make a profit. If the dollar gets weaker instead, you take a loss. That's it. That's the fundamental idea driving this whole market.
Okay, so who are the people and institutions actually trading in this multi-trillion-dollar-a-day market? You might be picturing a bunch of Wall Street pros, but the list of players is actually way more diverse than that.
I mean, the players are all over the map. You've got the huge banks, of course, helping companies do business across borders. You have those companies themselves, who need to exchange currency to pay for goods and services from other countries. Even governments jump in to help manage their economies. And then you've got individual traders, people just like you, speculating on these currency movements, often right from their own laptops.
Which kind of brings up a big question, right? With these giant banks and governments playing in the same sandbox, why on earth would an individual get involved? Well, let's look at both the appeal and the very, very real risks.
So, the appeal is pretty powerful. First off, currencies are always moving up and down, which means there are constant opportunities to potentially profit. Second, the fact that the market is open 24 hours a day means you can trade whenever it fits your life. And third, and this is a big one, is something called leverage, which lets traders control a big position with a pretty small amount of money.
But right here is where we have to hit the brakes and be crystal clear. As amazing as leverage might sound, it is, without a doubt, a double-edged sword.
And here's the crucial point, the absolute bottom line. That same tool that can magnify your wins can magnify your losses, and it often happens way faster than beginners expect. This is why getting a deep education on risk isn't just a good idea, it's non-negotiable before you even think about making a trade. Forex is accessible for sure, but it is not a get-rich-quick scheme.
When you really step back and think about it, as our world gets more and more connected, the movement of global currencies starts to affect everything, from the price of your morning coffee to the value of your savings. It really makes you wonder, doesn't it? In a world this intertwined, maybe understanding currency is the new, essential form of financial literacy.